And the next topic, the next unit will be health insurance and its introduction. Health insurance and its introduction. So what is health insurance? You all have health insurance, right?
Yes, ma'am.
Yes, you all have health insurance?
Yes, ma'am.
Yes, ma'am. It is a
Yes.
kind of assurance that for medical bill,
Yes,
everybody will
for
not be ready cash
yes.
with them. Certainly, if they meet with an accident or if they want any medical emergency, so they can directly go into the hospital and then take the treatment.
They can
Health
take the
insurance
treatment.
is a kind of assurance for the amount of medical bills.
Bill. Very good. For the medical expenses for a person. Very nice answer. Thank you. So here, what is this health insurance in simple words? As she has said, a very good answer. Yes, health insurance is also known as a medical aid. It is also known as a medical aid. So what is this health insurance? Mainly here, it is a type of insurance that covers the whole or a part of a risk of a person medical experiences. Yes, sometimes what happens, it depends upon the coverage. It depends upon the coverage the person is claiming to. So here what happens, sometimes the whole amount, okay, when you have some like 50,000 of medical expenses, depending upon your coverage, depending upon your claim, whatever you are having the insurance for what. So what it is going to happen, 50,000 is going to claim, right? It is going to cover. But sometimes what happens, they will not cover, or they will not cover this complete medical expenses. For example, if it is 50,000, they may pay only 25,000 and you have to pay the remaining amount. So it is somewhat like that. So it is the type of insurance that covers the whole or a part of a risk, okay, for a person, for their medical expenses. Here we are talking about a health insurance. So what is it? It is a policy and it is a contract also, right? It is a contract between insurance company and an person or an individual, where the individual pays a premium amount. Yes, individual, what he will do, the individual will pay a premium amount to the insurer. To whom he will pay? To the insurer, to a insurance company. So here the individual will pay to a insurance company, and what that insurer will do, this insurance company will do, they will offer us a financial protection. What they are going to do, when you are paying some premium amount, what they are going to do is they are going to give us some financial protection against our healthcare expenses in return. When we are sick, when we want some medical checkups, or when we want some treatment in our hospital for the minor or the major cases, diseases, etc. So this health insurance is going to help us. And it is also nothing but it is a contract between the insurance company and the insurer. For example, the person who is investing the amount in an insurance company. Okay. And what is the purpose now? As already we got an answer from a student. So what is the purpose now? Mainly this will help us to take undergoing long treatment. Yes, when a person is suffering with a long term of disease, long term of treatment, okay, till he die or till his survival rate, he should he should continue to take the treatment. So what happens here, if you don't have insurance, can you spend so much of amount for the long term of treatment? No. If a person is rich also, what happens, sometimes only for some extent they can just spend some amount for the medical expenses. But if you're having such insurance, when you're having this insurance, it will help us to undertake a long treatment, a long term of treatment. And next, if you see here, there are terms, and also it covers expenses. Okay, it will cover your medical expenses and also your surgical expenses for the policy holder. And also what it will do is this insurance help us to access, or it will help us to get a good quality of healthcare services. Yes or no? When you have this insurance, you can go and admit in KIMS, you can go and admit in Yashoda, you can go and admit in Apollo hospital. Yes or no? We can get quality of care in such hospitals. If you can nicely, with such access, you can go and get treatment in the hospital. And also one benefit is for the tax benefit. Yes, if you have this insurance, you also have the tax benefit. Yes, understood something about insurance? The person can take going long term of treatment, and it also helps a person to cover his medical expenses and his what surgical expenses. And next, what tax benefit? There is also benefit of tax, and also the person or a patient can get a best quality of care in any corporate hospitals. And next, we have the concept of insurance. Here, in this concept of insurance, we have some terms. What is this insurance policy? Insurance policy is nothing but a document. Insurance policy is what? It is nothing but a document which contains a contract. Yes, a document. Always, if you take an agreement, if you take a contract, what does it say? What does the document talk about? It talks about a contract between a insurance policy, between the insurer and the insured person. For example, first we will see what is this insurance policy. Insurance policy is nothing but it is a contract. It is a contract, okay, which contains the contract that is called the insurance policy. And next one is insured. What is this insured? A person whose financial losses are covered by the policy, that is insured. Insured means what? A person whose financial losses are covered by a policy. That means the one who is getting the benefit, the one who is getting a benefit is insured. And insurer is what? Nothing but a company. Insurer is what? Nothing but an insurance company who is issuing the insurance policies, who is handling the insurance policies, who are claiming the insurance policies, who are selling the policies. Or these all comes under the insurer. All this comes under the insurer. These are certain few important terms that will be coming across in the insurance. So here we have types of insurance. Can you see types of insurance here? Yes. What is this type of insurance? You have so many types of insurances, general insurances, etc. So first we will see about life insurance. Life insurance. What is this life insurance? Yes, what is this life insurance? Same again, we will come across a word, that is a contract between an insurance policy holder and an insurance company. The one who is investing the amount for a policy, and between a insurance company is a life insurance, a contract between an insurance policy holder and a insurance company. So mainly what happens here is, whereas the insurer the promises, what will happen? The insurer will promise to pay some amount of money. Okay, he will promise to pay some money in exchange for the premium. So what you have to do, you have to pay some amount so that you will get a premium for the financial protection. Here in this life insurance, first one is term life insurance. What is it? Term life insurance. This is very simple insurance, and this is the very purest form of insurance. This is a very purest form of insurance. Okay, mainly what happens in this insurance is this term life insurance guarantees, it will guarantee the payment of a stated death. Mainly what happens is, for example, this will provide protection for a specific limited amount. Okay, for example, if the person is paying, paying a premium amount for a period of time, for example, if you take between 10 to 30 days, 10 to 30 years, if the person is paying premium for a period of time that is between 10 to 10 to 30 years. So what happens if a person die? If a person die during that time, between this 10 to 30 years, what happens? What will happen to the cash? What will happen to the insurance? Who will get that benefit? Who will get that benefit? When the insured person is dead. Okay, when the insured person is no more, he died. So who will get that benefit? The insurance company will get the benefit. Yeah, please tell something, right? Will the insurance company? Yes.
if the person dies, then the nominee will get the amount.
Yes, correct answer. So what happens here? The nominee will get the amount. The nominee will get the amount. So here, main thing here, what happens is in this life insurance, it will get guarantee. Okay, they will guarantee the payment of a stated death benefit if the covered person dies within a specific term. If the person is dying within a specific term, then that amount is going to be transferred to their family members. So what is the limited time of the scheme is like insurances? It may be 10 years, 15 years, 20 years, 25 or 30 years. 10, 15, 20, 25 and 30 years. And the maximum age can be 80 years. The maximum age can be 80 years. Yes. And next one, if you see endowment insurance, insurance. What is this endowment policy or endowment insurance? It is nothing but a financial donation. It is nothing but a financial donation. Here, what happens is the person will contribute a fixed amount of money every month. Each month, what this person is going to do, he is going to just set some, invest some fixed amount of money for a period of time. Okay, for a period of time, or it is invested. So this person, what he will do, he will receive lump sum payment. When the person will receive, he will receive the lump sum amount at the conclusion of the policy term. When the term is going to conclude, or when it is going to finish, when the term policy is going to finish, the person at a time, he is going to get a lump sum amount. He is going to get a lump sum amount. And this policy also will be between 10 to 20 years or 25 years. In the last scheme or the last insurance, what we have seen, the insurance scheme is 10, 15, 20, 25 and 30 years. Okay, and the maximum age is 80 years. Here also what happens, the policy expired after fixed duration, and this here the insurance will be guaranteed. Okay, the person will be paying for it, and after his death, the amount is being transferred to a nominee. Here in this endowment policy, what is happening? The person will contribute the amount, a fixed amount. Amount is being fixed, and every month he is going to pay, or every month he is going to invest. And finally, what happens? The person will receive lump sum amount or a large amount of payment at the end of the policy term. And this is between 10 to 20 years, or it may be 25 years. And here, benefits. There are certain benefits of endowment policy. First one is insurance coverage. What is the first one? Insurance coverage. In insurance coverage, mainly what happens is, if you are having this endowment policy, there is a benefit of insurance coverage. Okay, the person can ensure financial security for his family in case of death. Okay, in case of death, the person may be having a insurance coverage. And next is guaranteed returns. Here, what happens when there is one more benefit or advantage of this endowment policy, that is guaranteed returns. The policy holder will receive a lump sum payout at the end of the policy time. Here, what is happening? Same as we discussed here. The person will get a lump sum amount at a time at the policy time. And last one, and the next one is tax benefit. Here also the person what is getting a benefit of tax. Mainly the premium paid towards the policy are eligible. Okay, when they are paying this premium, they are eligible for the tax deduction. At least how much? At least up to the limit of 1.5 lakh per year. How many? 1.5 lakh per year. The maturity amount will be received from the policy and is also the tax free when the person is getting this maturity amount. Okay, during that time also what happens is it is going to have a tax free policy. So this is a very good advantage of this endowment insurance. And next one is loan facility. So what is this loan facility? If the person is having this endowment insurance, they are going to have option of availing a loan. They can avail a loan against the policy. Interest rate also will be very low if the person is going with this loan option, and the person is having a endowment insurance. And if the person is like usually if he want, or if he's interest to take an loan in it, the interest rate also will be very lower or less if you compare with the other loan options. So this is one of the good benefit also for this endowment policy. And next one is disciplined saving. So what is this disciplined saving? It helps the policy holder regularly to save the amount for their financial goals. Okay, so these are the benefits of the endowment. One is what? For the tax benefit is it is helping for the loan facility. It is advantage for the guaranteed returns. It is giving a good return at a lump sum amount at the end of the policy. And also it is giving a insurance coverage, and also it is giving you a disciplined saving. Okay, helps for policy holder to regularly save towards a financial growth or their goals. And next one is whole life insurance. So what is this whole life insurance? Whole life insurance. So this is a type of permanent life insurance. What is it? The name itself is telling whole life insurance, right? It is a type of permanent life insurance. It is a permanent life insurance. What it will do is it will provide coverage. What it will do? It will provide coverage throughout the life of the insured person. For example, if I am a person who is investing in it, so if I'm taking this coverage, so for my lifetime, okay, till I survive, till for my life throughout it, this insurance is going to cover it, okay, through the entire life as long as the premiums are paid. You have to pay it according to their policy, the premiums you have to get paid. So insured policy with 5 lakhs. For example, if you take we will take one example. If a 25 years old person is there, or if you take an 25 years person, so what does he do if he is taking this whole life insurance? He is taking this whole life insurance at the age of 25 years. So what will happen? He will receive a lump sum payment. He will receive lump sum payment at the age of 45 years. At the age of 45 years, he will get the lump sum amount. The age of which his age will be like 20 years premium payment term will expire. Okay, 20 years premium term will be expire. So he can use this money for his retirement also, and also his this coverage, whatever the amount is getting, will continue till he turns 100. Okay, so he can continue if he want to continue this premium, this package after his retirement, and also till he till he goes till to 100 also, 100 years also, till he die also, he can continue this policy. That is whole life insurance. Whole life insurance is nothing but it is a what? Permanent life insurance. Okay, mainly it covers throughout the life of the insured person. And next, if you see, you have the another policy called money back policy. Money back policy. What is this money back policy? Money back policy. Money
Ma'am,
back policy. Yes.
Ma'am, if I'm not wrong, money back policy means you get a certain amount of return for the premiums you've paid over the years.
Yes, correct. So here what happens is that here. So here what happens in money back policy is the money is returned to a life insured to the person as a survival benefit after a set of period. So after a period for after a benefit, so what happens is the money is being back for the policy. So this when a policy holder is done with the policy term. Okay, when a policy holder is done with the policy term, the money back is guaranteed for a person. The money back is guaranteed for a person, and this will provide a regular payouts, and this will provide a regular payouts for the person in a money back policy. Yes, and the remaining this marriage endowment, united link insurance and all we are going to see in the tomorrow's class. Okay, this next. Okay, I've just prepared a money back policy, whole life insurance. So once just we will revise or brush up and we will just end up the topic.
Madam, endowment insurance, can you explain once more?
Endowment insurance, yeah. Endowment insurance is what is a person contributes. Okay, a person what he do it, he will contribute a fixed amount of money. He will contribute a fixed amount of money every month for whatever period he is being allowed. Okay, he will select some period, right? Like 10 years, 20 years, 25 years, like that. He is going to have a period. So what he will do every month, he is going to invest the amount, a fixed amount he is going to invest. And at last, what will happen is he will get a lump sum amount. He is going to receive some lump sum amount at the end time of his policy term. And there are certain benefits. Okay, one thing here in endowment here we can tell is financial donation. Okay, it is a financial donation. So there are certain benefits of endowment policy. Here, if the person is taking this endowment insurance or endowment policy, there are certain benefits. He will be benefited with insurance coverage. He will be getting a financial security for his family. Okay, he will be getting insurance, financial security for his family in case of his death. And what happens? The other one is guaranteed return. Okay, this policy holder, this we have in the definition, like he is going to receive his lump sum amount, guaranteed return. So whatever the amount he have been invested for, that much amount he will be getting back. He will be getting a lump sum amount. He will be getting at in the end term of the policy. And one more benefit what he is going to have is this tax benefit. So if we will be having this tax returns and all, right? So if in such cases, if this person is going with this endowment insurance, so what happens is this person will have a benefit of this premium paid towards the policy. Okay, he will be eligible for the tax deduction for how much? At least if he is a insurer of this endowment insurance, at least rupees 1.5 lakh per year. How many? 1.5 lakh per year is being deducted in the tax deduction. And when at last, when you get the maturity amount, if you are getting the maturity amount of the insurance, during that time also, you will be having a, during that policy also, you will be having a tax free. Nothing like a tax is not deducted in this endowment policy or in this tax benefit policy. And last one, what will happen? The person will have this loan facility also. Okay, the person can opt for a loan. He can avail for a loan against the policy. If he's taking a loan for this policy, so what happens is the interest rate, if you compare to the other loans, the loan interest will be more in the other loans. But if you take in this endowment insurance if you're going through this insurance, then the interest rate also will be very low in this loan facility. Okay. And discipline saving, obviously. Yes. Did you understand?
Yes, ma'am.
Yes, ma'am.
Yes. Okay, so in this, again, one more benefit what we have for this endowment insurance is discipline saving. Mainly, it will help us to regularly save the amount because we are paying the fixed amount, right? We are paying the fixed amount. Every month, we are going to invest the amount. So with this, what is happening? It is making a person to be disciplined in his saving, okay? Because when you are saving so amount and when it is giving you so and so benefit, so immediately what happens is we will feel interested, or we will have an interest. Okay, chalo, I have to fix the amount. I have to pay the amount for my policy. So it is making a person to be disciplined also to pay such type of insurances or to turn out your returns. So that is about your discipline saving. It is helping us to save our financial goals and it is helping us to regularly save our amount. That is about your endowment policy. Whole life policy is what? It is a permanent life insurance. It is a permanent life insurance. So it is also covering. Okay, here also we have seen like if you say, if you take, for example, now I said you, if a 25 years old man is there and for 25 years, what if till 25 years, his age is 25 and till 25 years is limit. Okay, if he is taken till the loan, this insurance age for 25 years, finally what happens at his age when he comes to like 45 years, when he is coming to his 45 years, he will be getting his lump sum payment. He will get the lump sum payment, and at the time when he is getting this premium, if this premium amount is getting expire also, what he can do is again he can turn it. Or again, this cover, it can also cover for his retirement, and also it can cover, he can continue. Now, this whole life, the name itself is telling whole life till the person is dead or till the person is passed away, he can continue this whole life insurance. Okay. Till 25 years. Now, after 45 years, if he's still interested, chalo, he will continue again. So he's going to continue his whole life insurance policy. Money back policy, as we discussed. Okay, main here, what happens in money back policy is the money is returned to the person, whoever is insuring in it, okay, for the survival benefit, okay, for a set of period, only for a set of period. What happens is they will get a survival benefit, and the one who is investing, they will get their money returned. That is about a money back policy here. And the money back is also guaranteed whenever he is in need, or when the policy term is been, the regular payout is also regular, and it is guaranteed for the insurer, whoever is paying this thing. And one thing, last time we will discuss this term life. What is this term life insurance? First, what is insurance? Insurance is nothing but life insurance is what? It is a contract. It is a contract between the insurance policy holder and a insurance company. You both are making a contract. We both are making a contract. Chalo, I am going to invest money in your policy, or your policy holder, or in your insurance company. So if I pay this much, how much you are going to give me? Chalo, if you are paying this much amount for me, then we are going to invest, and finally you will get this much amount, so and so amount finally. So with this, what you're happening, you both are making an agreement you're just making a promise to just pay some amount in exchange of the premium for your financial protection, mainly for your financial protection. So term life insurance is what? This is very simple. This is very purest form of the life insurance. So here mainly what is happening is, if a person is being covered, okay, the person is going on paying, and this here is what, like the person may pay till 10 years, he may continue till 15, 20, 25, until 30 years. You will be having a limited time, specific limited amount, and a limited time is that is like example of 10, 15, 20, and 25 to 30 years. Okay, and the maximum age is around like 80 years. Now, if you see this term life insurance, it has been given like 80 years. If you see in the whole life insurance, what did we see? Till 100 years, right? Till the person die. Okay, till the person is dead, the insurance can be continued. That's why it is termed as whole life insurance. So here what is happening till 80 years. So when, if the person, the one who is having the insurance, the one who is paying an insurance, okay, the one who is a insured person in between, if he is like he's passed away or dead or died or whatever it is, what happens to the amount? The amount will be received by a nominee. The amount will be received by a nominee. Yes.